should work. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Thank you, everyone, for your patience. A little behind our start time, had small technical difficulty, but glad to be here with you and glad to be here with two people that I got to spend some time with this past weekend, joined by Jorge Ganoza of Fortuna Silver Mines, and of course, Dave Kranzler from Investment Research Dynamics. And we're going to be digging into Fortuna's second quarter production numbers, but also touching on a trip we had this past weekend to see the Séguéla mine in person, and was nice to get a tour there, actually see everything that goes into bringing gold out of the ground, and quite an impressive operation, and amazing, perhaps equally so, that Jorge, you were giving a tour of the mine over the weekend, and then you have production numbers coming out in just a few days later, and joining us late at night from Paris. But pleasure to have you here as always. And how are you doing tonight?
No, great to be in your program again, and here with Dave, and yeah, no, it was a few most interesting days at site, and look forward to sharing the latest with you.
Well, I think we will be excited to dig into that. And Dave, good to have you back on here as well. We just finished recording tomorrow's update, but nice to see you again live with our audience. And how are you today, sir?
Doing well, thanks. Still a little bit jet lagged, but and sleep deprived, but recovering.
Well, I hear you. Long trip to get there, although well worth it. And perhaps we'll hold off on the Séguéla trip for just a moment, because I know, Jorge, you did have production numbers out this morning, and I'm going to pull that up. Fortunately, things were largely in line, although perhaps just to kick things off, you could give us a walk through how things went in the second quarter at the various mines you're operating.
Yeah, on the positive side, we had a first gold reported, or first quarter reporting gold at Séguéla. We reported about 4,000 ounces of gold. Our first sales will take place actually tomorrow, July 13th. But no, nice to see our first quarter reporting gold production out of our newest flagship asset. Also, the Yaramoko mine in Burkina Faso had an outstanding quarter. 29,000 ounces of gold. The mine is benefiting from some new access to some new zones outside of our reserves and resources, really, where we're finding some high grades. So the development of those new zones is feeding 13-gram gold material to the mill. So therefore, the excess production, which is being bumped by the development or being fed from these high-grade zones, right? The low note came out of the San Jose mine in Mexico. We had a 15-day stoppage during the quarter, and that took a toll in both gold and silver production, right? We know that a lot of companies have been struggling with the profit sharing. We saw Newmont announcing force majeure at Peñasquito and placing the mine on standby while they settle on negotiations that are dragging for, I believe, close to a month now. So, we were able to settle with our union in 15 days of hard negotiations. That's behind us, and we're looking to recover production, and we expect we'll be able to meet production at that mine within range of annual guidance, in the low end of range, but within range. And, the other mines perform according to expectations during the quarter.
Yeah, and Jorge, I know you mentioned in the press release that even with the San Jose mine getting shut down for a little bit, still overall helping to be offset by beginning production at Séguéla and on target to meet the annual guidance range.
Yes.
Okay, and Dave, would you like to take over and ask some questions from there?
A couple questions here. So the gold equivalent production was 93.4 thousand ounces. What would that have been if San Jose could have operated for the full quarter?
San Jose was scheduled to deliver around 9,000 ounces, no, 10,000 ounces, around 9,000 ounces in the quarter. So, on a consolidated basis, once we add up everything, I think, the shortfall in gold production was offset by higher production at both Yaramoko and Séguéla. Where we took the bigger hit was in silver, right? San Jose is our largest silver contributor. So we saw a 24% shortfall in silver for the quarter with respect to the previous quarter or the comparable quarter a year ago. So, Mexico has turned into a very difficult operating environment for most miners. And but the issues are behind us now. We're looking forward to a strong third quarter.
So zinc and lead production were up 29 and 34% respectively year over year. What drove that?
The Animas vein, which is the main mineralized structure at the Caylloma mine, on the deeper portions of the vein, we have developed a very nice ore shoot, and the lower levels are exceeding our expectations and giving us upside surprises on lead and zinc content, right? And that's where mining is concentrated now, and we're seeing shoots with much higher grades than the model originally indicate. Sometimes we see these surprises to the downside, and sometimes to the upside, and that's what we're seeing now, right? Very, very welcome.
So is that I guess, is that going to continue to be volatile, or is that going to be sustainable?
No. I believe at least for the year we see sustainability because those stopes will continue producing throughout the year. So we're very enthused about what we're seeing in those deeper levels of the Animas vein. And again, that's a mine that's been in production. That's a vein that we brought into production back in 2006. 17 years of production, and in the deeper levels of the mine, still giving, right? So, Caylloma is our smallest operation, but our first mine in the portfolio, and continues giving, right? Incredible asset.
So I actually have two more, just because you brought up Yaramoko. The average grade, I think you mentioned, was 13 grams per ton this quarter.
That was development grade. This varies, but production stopes usually source between 50, 60, and up to 70% of production for the mine. And development ore sources anywhere between 30, 40% of production. In this quarter, we saw development ore sourcing as much as 40% of production, and that development ore grade was coming with 13 grams per ton, and it comes from some of these higher grade zones on the fringes of our current reserve envelopes. So that's why, as we noted in the news release, we'll be looking to update our resource and reserve estimate for the Yaramoko mine before the end of the year, because we believe what we are seeing merits an interim update. We produce our consolidated resource statements every year at the start of the year, usually February or March. But instead of waiting now until February, March 2024, for Yaramoko and Séguéla, we plan to produce interim updates probably around October, November.
Okay, so that 13 grams per ton, that must have reminded the Roxgold fellows of the old days of that mine, the early days.
Yes, and again, that's the beauty of the business, right? These are areas that have been drilled with some spacing. So, I don't believe what we're seeing can dramatically change the story of the mine, but certainly can help season production for the next 2 years. Absolutely.
Oh, okay. Well,
I think it has that potential. So that's why we want to produce an update and put it out for everybody to see and do. But my expectation is that what we're finding, is high grade. And it can help season production, seasoning for production over the next couple of years. Yeah.
So when you put out the resource and reserves estimate update, is there a chance that it'll be accompanied by a reversal of that charge that you took on Yaramoko?
An impairment reversal. I don't want to get ahead of myself. We have to produce the resource reserve estimate, do our numbers. But could it be possible? It could, but we have to do our numbers, right?
Then one more thing really quickly, I noticed the grade control drilling you were able to increase the grade on the antenna pit by 13% and also the tonnage. Was that kind of a surprise to you, especially, a 13% increase in the grade? Because it seems like Séguéla is the gift that keeps on giving all of a sudden.
We love it, and that's why we bought it. The issue here for our investors and our shareholders, is that good things take time. And we acquired Rockgold back in July 2021. That's when we closed the acquisition. And it's been almost 2 years now. It's been 2 years of acquisition, construction decision, deployment of $180 million in capital, get the mine going. So it's only now we're going to start seeing the benefits of the transaction. The driver for that transaction was Séguéla. Yaramoko is a nice to have. But the driver, the value added, comes from Séguéla, the exploration potential, and we're seeing one more of these opportunities with the positive reconciliation. We're most excited about that. We closed our drilling spacing from 25 meters down to 10 meters.
Mm.
We have infilled almost 1 year of production. And the outcome is that we have 15% more gold in inventory, and that's significant, and that's why we put it out, right? So we're quite excited about that. Yeah, absolutely.
It's fantastic.
Yeah, and Jorge, obviously you've started with antenna, but was wondering if you could provide an update of what is the sequence of some of the other locations when you start producing from those, and what the plan is like going forward there at Séguéla.
You guys just been on there on site. You walk through antenna, you walk through Kula, you walked through Sunbird. This is a good map, but nothing like walking the ground, guys, right? And seeing it for yourself. We currently have 6 deposits identified where we have mineral resources. Sunbird is not part of our life of mine plans yet. So we have in the mine plan Antenna, Kula, Agouti, Boulder, and Ancien, those 5 deposits. And Sunbird, we will look to incorporate Sunbird to our mine plans this second half of the year. We currently have about 750,000 ounces of gold at Sunbird in different categories, right? We would expect to be able to, in this interim report I was mentioning just a while ago, provide an update after we have done all this infill drilling and produce reserves. But we're mining today Antenna, and towards the end of the year we'll start mining Ancien, which is a high-grade pit. So those are the two deposits that will be sourcing ore this year. And then soon to follow in 2024, we expect to start seeing Kula coming. But again, all of this is iterative because Sunbird is only going to be modeled this second half of the year, and things can certainly change based on that.
Okay. Other question I had here, you mentioned gold recovery was about 89.6%, design recovery 94%. I was wondering, what is the process like to get up to that 94%? What steps do you take over the next couple months in order to achieve that?
The first is grade, right? We've been feeding low grade in the initial weeks of startup, and that is normal. So once we stabilize grade closer to reserve average, that will help give recovery a bump. And the second and more important one is stability in throughput, right? As you can imagine, in the ramp-up phase, we operate for 3-4 days, then make a stoppage, adjust things, calibrate things, everything from a weightometer to the speed of a conveyor belt, all sorts of things. And we relaunch again, operate for 2-3 days, stop, relaunch again, make adjustments. It's a normal startup. So we have already been able to, in these few weeks, push nominal rate of production beyond the nameplate capacity. And, with all of this instability still that we see, we've been able to achieve, almost 90% recovery. So we're quite confident that with the mill operating steadily, with steady feed, a more stable grade as well, 94% is very much within reach, right? I expect this third quarter to be a far more stable quarter.
Okay. And while Jorge and Dave, you won't be able to see this, unfortunately, I have a short video going showing some of the footage of what we saw on the ground there. Also have some footage of the gold pour. Jorge, I was wondering, and we talked about this a little bit while we were there, must feel good each time you actually see some of those gold bars come out, rewarding feeling, especially a 1.5-year process, a lot that went into building an impressive facility there. And how does it feel each time when you see the gold actually come out and into that doré bar?
I just reflect on the people, right? People, and just to put things into perspective, our average grade at Yaramoko today is 2.66, almost 2.7 grams of gold per ton. That means that in 1 million grams, which is a ton, a metric ton, in 1 million grams, we extract 2.7 grams out of 1 million grams. And the work that goes behind that, the people, you guys seen the people making this happen every day. And I'm just so proud to be able to work with all of this. There is 5,500 people making Fortuna happen every day. And when I see the gold bar, yeah, it always appeals to that child that we all have inside of us, I'll have to admit. But I have more fun looking at the operation, the people, everything that gets involved. And of course, everything culminates with the gold bar, right? But that appeals at that child in me, seeing that.
Yeah, and again, I think we have the video playing in the background there. It's interesting, what you just mentioned that you said as well when we're at the mine, to put it into perspective that out of 1 million grams, you're looking for 2 to 3 grams of gold through all of that. And although as exciting as it was seeing the gold pour, that perhaps you feel even more excited just about the exploration potential of some of the other locations that you'll be getting to later this year and in the next coming years.
We tried to showcase that during the visit. Our view is that we have tremendous optionality at Séguéla. Multiple targets at different stages. And sometimes we go into a property, a mine, a prospect. And as we were discussing there, you sit around with the exploration team, and it's difficult to see the guys come up with good ideas. And at Séguéla, there is no shortage of ideas, right? There is no shortage of options and opportunities. We have over 30 targets that are untested as of yet. We're currently drilling Badior, Barana, and Kestrel, 2 new emerging prospects. We already published some results for some of those with high-grade gold intervals at the tune of, a few meters with 11 grams, 12 grams of gold. We're back there drilling again, and we have a pipeline of close to 30 of those type targets, right? Not all of them are going to emerge and advance into a resource reserve, but certainly the expectation is that a few of those will, right?
Yeah, and Jorge, I won't make you answer this one. Perhaps Dave, you can comment on it, but it was interesting to think, as you mentioned, that you have, rather than needing to generate ideas, you have a lot of locations to look at, especially when you think about what the gold price might be in 10 or 15 years, and hard to imagine it going a lot lower with today's environment and culture, but certainly a good position to be in. And Dave, do you have any thoughts on that?
In terms of where the gold price is going?
Well, just the position of the Séguéla asset, where you have a lot of targets and there's seemingly going to be a lot of production, and the fact that that will be ongoing for quite a while, which with the possibility of a much higher price in the coming years.
I mean, you don't have the map up. I don't know if you have it handy, but in my write-up of our trip for my newsletter that comes out tomorrow, I've got a map of the entire property package, and it's the one that shows the deposits, the potential deposits like Badior and Barana and P3 and Kestrel, and then all of the targets, right? And so it's like we may just what we've, and even with the resource update that comes out, resource and reserves update that comes out later this year, we may just be seeing the tip of the iceberg on this property. And it's kind of mind-blowing when you think about it. I mean, not saying it's going to happen, but there might be another sunbird on the property. You don't know yet. And certainly, like with the grades that the initial drill results from Badior showed, I mean, that's extremely high-grade gold for near-surface mineralization.
And if you let me give a punt to that question, in 2011, over a decade ago now, time flies, we were mining, and our all-in sustaining cost at the time on a silver equivalent basis was $9, and silver traded up to 30. So we were running the mining business with 3 times margin over all-in sustaining cost. 3 times margin. At the time, Fortuna was more like 120,000 ounce per year producer. That converting everything into a gold equivalent, no? 150,000, 120,000 ounce per year producer. That's, a little over a decade ago, producing at an all-in sustaining cost of $9. So 3 times margin. Today, Fortuna produces 450,000 ounces of gold equivalent. But, with $1,900 gold, $1,950, I haven't checked the prices this afternoon, our margin is 25%. Gold if we see gold run to go to Chris' question, and just thinking of an inflation adjusted gold price, gold should be closer to $3,000 or $3,500 to provide 2-3 times margin, right? The difference is that Fortuna today produces 450,000 ounces. So if we go back to those scenarios, I think our business is well positioned to capture the opportunities that those higher prices will present to mining companies, right? It was a tremendous business back 10 years ago. Then prices swamped, inflation crept, margins got squeezed. Today, Fortuna has a nice business. We generate, sufficient free cash, but that's not why you invest in mining. You invest in mining for when you have 3 times margin over your cost, 4 times margin, 5 times margin. That's why you invest in mining. And that will come if prices go back to what would be an adjusted price projection for inflation. And I think that will be prices in the range of $3,000 for gold and over at least, right? Can that happen? Well, we all expect and hope so. But in the meantime, Fortuna has a good business, but we are certainly geared to benefit from a spike, right?
Okay. And last question I had, I know it's getting late your time and we'll wrap up shortly, but obviously announced the Chesser Resources acquisition earlier this year. Everything's still on track and progressing forward to closing in a couple of months?
Yes. Lots of work in the background to close the deal. All terms are agreed upon, but we just have to go through the regulatory approvals and this is a transborder deal. This is Chesser is an Australian company that adds some complexity to the process, but all going well.
Okay. And Dave, did you have any final questions today?
Nothing I can think of.
All righty. Well, Jorge, any other thoughts that you'd like to share before we wrap up?
It was great to host you guys. This is the first time we host visitors, at least so distinguished, to the Séguéla mine, and we look forward to receive more visitors because that's the way to really see it and really understand it, right? So I expect we'll be hosting more visits, but it was a pleasure to have you guys as the first adventurous visitors to come to site.
Well, it was certainly an honor to be there. And like you said, it really did put things a bit more in perspective, seeing how far apart some of the different deposits are. And I remember asking one of the exploration geologists, how do you find an area where you have mineralization this far away? And he was talking about how a lot of it is just going around looking at the rocks, taking samples, and then eventually finding locations for drilling. So it was really quite helpful for me to see. And you guys took such great care of us there from the moment we got off the plane all the way down to the site and back to Abidjan. So thank you again kindly for having me. It was an honor and a pleasure, and great to see you there as well, Dave. And Jorge, congratulations on all that you've accomplished in this past year and a half there. It really was an impressive operation and a lot to be proud of. So also appreciate you joining us again late tonight. Congratulations on the second quarter production numbers, and great to see that things are on track and have a lot to look forward to with everything that's starting at Séguéla. So with that said, going to wrap up for today, but thank you both for being here, and we will see you again soon. And to everyone watching at home, thank you for joining in, and we'll look forward to seeing you soon as well, and have a great night. And we are